Good morning, good afternoon, everybody. Welcome to this webinar about the latest tax insights for network marketing companies. Today, we will discuss the most important tax challenges based on our significant experience in this sector. My name is Robert-Jan Bredhauer. I'm an indirect tax partner at Grant Thornton in the Netherlands. And seated next to me are Monique Pisters and Charles Marais. Before they will briefly introduce themselves, I want to mention that this is an interactive webinar. On the right side of the screen, you can see a gray block stating chat. In that chat function, using the chat function, you can raise any questions you may have during the webinar. We are going to try to discuss and answer some of the questions during the webinar. All the other questions which are not answered during the webinar will be answered in the Q&A, which you will receive afterwards. Monique and Charles, can you quickly introduce yourself? Let's start with Monique.
Yes, thank you. Well, hi everyone. Thanks for joining us. So I'm Monique Pisters. I'm an international tax partner at Grant Thornton. I've been with the firm for 12 years, and prior to that, I used to work with KPMG and Deloitte. I work in the direct tax team, the international tax team, and as such, I also deal with quite some MLM companies, and I assist them in a broad field from onboarding into the Netherlands and choosing between a permanent establishment or an entity to substance requirements, doing the subsequent corporate income tax filing, and also guiding MLM companies with Charles in the field of business restructurings.
Thank you. Charles?
Thank you. Good morning and good afternoon, everybody. My name is Charles Marais. I head up the transfer pricing practice for Grant Thornton Netherlands, doing that about 6.5 years. I also co-lead the global transfer pricing team for GTI. Prior to this, I worked at a Big Four for several years in Netherlands, Mexico, and the US. And yeah, we look forward to sharing our insights with you today.
Yeah, so let's proceed to the slide stating the agenda. So as you can see, a lot of items which we want to discuss in the next 45 to 60 minutes. And we will leave some time also for, of course, for some questions. The first subject which we wanted to discuss is a quick going back to the e-commerce changes of the 1st July 2021, which was one of the biggest changes in the indirect tax field in the last 10 to 15 years. I think the last big change was in 2010 with the change in the service allocation of for VAT. So next slide, please. So as of the 1st of July 2021, yeah, a lot of change during that time. Next slide, please. Yeah. So the most important changes in the e-commerce package were the new rules for distance sales. So distance sales are the sales of goods to private individuals shipped from one EU member state to another EU member state. So the goods were already in the EU when they are sold. Before the 1st July, we had to deal with all kinds of distance selling thresholds, meaning that if a company was quite successful, like a network marketing company selling to, let's say, 27 member states, all private individuals or mostly private individuals, they had to register for VAT in all those 27 jurisdictions, which result in a significant cost and burden for registration and compliance, not only VAT, but often they had to deal with Intrastat or certain other types of legislation which they needed to comply with. And as of the 1st of July 2021, the distance selling thresholds were abolished. And it was stated in the legislation that all the sales of goods shipped from one member state to another member state are taxable in the country of arrival of the goods. You would say, yeah, but it would not result in the fact that it would result in a simplified administrative burden for our company. Yes, but at the same time, they also introduced the one-stop shop. And with that one-stop shop, you were able to deregister in all the various countries, report all your turnover and VAT in one one-stop shop return, pay it to one tax authorities, and that tax authority is going to transfer all the funds to the various tax authorities. So yeah, it resulted in a quite decrease of compliance costs, of course, and yeah, like you all know, in the network marketing industry, a lot of companies started deregistering their companies in the various countries, which saved them a lot of, which saved a lot of money. So yeah, all the sales could be reported in one registration. You only have one quarterly OS filing. So next to the 4 quarterly Dutch VAT returns, you would also have 4 quarterly returns. In fact, that's it. So quite a simplification in that scheme.
Robert-Jan, maybe a question. You mentioned the rules being applicable for B2C. How about B2B?
Yeah, so this is especially created, of course, for B2C sales, because those sales are taxable in the country of arrival of the goods. Usually when a company sells any products to businesses, they can make use of the 0% VAT rate, the so-called intercommunity supplies of goods. So that usually did not result in a VAT registration obligation itself. It is possible to report different types of turnover in the one-stop shop return, so not only supplies of goods, but also for services, but mainly focused to B2C sales. And yeah, that results in some difficulties, which I will also later explain when I discuss the changes for, especially for services. So one of the biggest upsides for using the one-stop shop regime is that you no longer are required to issue any invoices. While before the 1st July, you were really required to issue invoices to your customers, which had to comply with the invoice requirements, etc. So there's no requirement anymore. However, if you still issue any invoices and you also are stating that the document which you are issuing is an invoice, you still need to comply with the invoice requirement. So if you do not want that anymore, it's better to not issue any invoices to your customer at all, or make a change and use the wording receipt instead of invoice. Of course, also the same with all e-commerce companies, also network marketing companies, they have to deal with returned goods. People buy products, they want to return it. And often that is the case also for your type of business. And the positive side from the one-stop shop filing is also that corrections can be reported in the next one-stop shop filing as well, and it reduces the payment of VAT of that applicable period. The only exception is that the total amount reported for a particular country, it should be positive. It cannot be negative, meaning that you cannot reclaim any VAT refunds using the one-stop shop regime, only pay the VAT. If you want to make use of the one-stop shop, you need to be registered before the start of the quarterly period, before you want to start using the one-stop shop scheme. So you need to be, you need to be on time.
Now, Robert-Jan, are all tax authorities ready from a technology perspective for this ask?
Yeah, good question. Yeah, it took quite some time, of course, to introduce this. This was already planned maybe 5-6 years ago. So most tax authorities, they knew it was coming, but still some countries like the Netherlands and Germany, and those two countries will say, yeah, we are going to create a new system in order to be ready for those filings. But yeah, it was quite difficult to create that. So they stated, yeah, we are not ready before 2024, 2025. But they were able to create a solution. It is possible to submit your OS filings also in the Netherlands. But it takes some time. We need to manually type in all the figures in a separate return form before we can send it to the Dutch tax authorities. While countries like Ireland, they already create a solution where you can upload the information in a file, which make it much more time efficient and even also, of course, cost efficient to submit those OS filings. And a nice anecdote is also that the two countries, the Netherlands and Germany, who were stating that they were not ready, I think 2 months after the 1st July, when they introduced this new legislation, those two countries had 80% of all the OS registrations in place. So yeah, they had to deal with a lot of registration. They were able to meet that as well. So yeah, it's a nice change, but it results still in some difficulties for the various tax authorities. The second big change, which was included in the e-commerce package, was also that there were new rules for the importations of products. So before the 1st July, if an order was valued less than 22 euros, you are able to import your products VAT-free in the European Union, and also do not have to pay any customs duties, which was not, to be honest, it was not nice, of course, and correct for EU companies, because a Chinese or let's say US company could sell the same products without paying any VAT, while if the same product would be sold by an EU-based company and it was shipped from the EU, they had to pay the VAT. So they changed that and they abolished the 22 euro threshold, and they introduced the import one-stop shop. So all the imports are taxable in the country of importation of the goods, which again would result in a lot of VAT registrations. But making use of the import one-stop shop, you can avoid that. You can register in one member state, still charge, of course, the VAT of country of arrival of the goods, but remit it in all in one import one-stop shop returned. And it can only be applied if the order value is less than 150 euros. Next slide, please. So what I stated also is that you can register at one tax authority to make use of the import one-stop shop. And the biggest upside is that you don't have to pay any import VAT upon importation if you make use of the import one-stop shop and the order value is less than 150 euros. The only VAT which need to be paid is the VAT of the country of arrival of the goods. So you don't have to deal with what a difficult situation of paying customs duties which cannot be reclaimed at all, reporting all kind of importation. So it's a big simplification for companies shipping their product from outside the EU. The downside is if you want to make use of it, you need to appoint a VAT intermediary, and they are liable for any VAT paid on behalf of the company. So there are not that many companies who are willing to take that risk and act as a VAT intermediary. That's also the reason why Grant Thornton Netherlands is not taking the option to act as VAT intermediary for our clients, but we built quite some good relationships with companies who are willing to act as VAT intermediary, and that works quite well, of course. We're almost 1 year after the introduction, and not many problems arise from that type of field. The third change, important change in the e-commerce aspect, so it's on the next slide, is that there are some new rules for platforms. Usually network marketing companies are not dealing with any sales on platforms, but if it would happen, let's say a platform is called, for example, a platform is Amazon. If you sell your products also using a platform, then based on that legislation, it can be the case that not the seller, so not the network marketing company, is liable to remit any VAT, but the platform of the electronic interface is responsible to remit any VAT to the tax authorities. And not many platforms are waiting, of course, on this additional requirement for them, because it makes their life more difficult than before. So many platforms, they will say, okay, we're not fulfilling any conditions or fully do the conditions, and we're not responsible to remitting the VAT. And you, as a seller, as a network marketing company, would be responsible to pay the VAT. But that's something which not goes well often. So if that would be the case, if you experience that you're selling and shipping using a platform, please make sure that you would be really responsible to remit the VAT instead of the platform. And a final big change is in respect of services. So not only the distance sales of goods can be reported in the one-stop shop return, but also the sales of services. So an example for that is the sale of event tickets. Many network marketing companies, they organize all kind of incentive trips, and it can take place in a different EU member state. and event tickets are taxable in the country where the event takes place. So if it is in the EU, you still have to charge VAT of the country where the event takes place, but you can simply report it in the one-stop shop return. Again, like Monique also asked in the beginning, it's only required or only possible to make use of that if you make B2C sales. If you have a VAT registered consultant or member, or how you call your customers, your clients, then you cannot make use of the simplification. So officially, you still need to charge VAT of the country where the event takes place, but you are not allowed to report that same VAT in the one-stop shop return because it's only for B2C sales. And that's a very strange side effect of this new legislation, because at the end you will have the same consequences. You are going to remit the VAT in the correct country at the correct time, but officially you're not allowed to do so. So that's a little caveat into this legislation as well. And the same applies for services. If you are a non-EU based company making the sale of services which are taxable in the EU, then you can make use of the non-union scheme and still avoid a registration in all kind of different countries. So now I wanted to proceed with a poll question in respect of this first subject. And the question is, did you experience any difficulties with getting ready for the new e-commerce VAT legislation last year? I selected 4 options. Please select the option which is best suitable in your situation. I wonder what your feeling is about that. So let's wait a little bit on the outcome of the poll question. Some more seconds. The outcome will come up. Yeah, here it is. So 43% of all companies attending this webinar, they say yes, we did not experience problems, but we were registered on time. 29% also stated that the registration is not fully completed, so they still experience quite some problems in that respect. No one had problem to find a VAT in the EU, so that can mean that no one is selling from outside the EU, so that's probably the case. But also 29% of the people say no, everything went smoothly. So it's very diverse situation, and that is really also our experience that with some companies everything went smoothly, and with some companies there are still some problems and they need to be fixed. And we of course are happy to do that. So also with this new e-commerce legislation, it's getting more and more important to have a local presence, to be in fact incorporated in the European Union. And it can be by incorporating a Dutch entity, for example, or even by using maybe a permanent establishment or a fixed establishment. And not only VAT consequences would arise in that situation, but of course also corporate income tax situation. So Monique, maybe you can discuss a little bit about the difference between those two.
Yeah, of course. So often when companies decide to move to the Netherlands and they want to do business here, they ask me the question, well, what's the difference between a permanent establishment and an entity in order for them to make the most appropriate choice? To start off with, there are quite some similarities between a permanent establishment and an entity. So both of them are subject to Dutch corporate income tax, and both of them should file a Dutch corporate income tax return based on the profits, and that's Charles's topic, of course, which should be allocated to them. What is also the same is that, of course, they are subject to tax in the Netherlands. But where the differences arise is in the field of liabilities specifically. So from a liability perspective, a BV is personally liable for its debt. So the parent company cannot be affected by a liability which affects the BV. That is different in terms of a permanent establishment, because the head office is then liable for anything that happens at branch level. So what we typically see is that industries with a high probability of liabilities is more likable to go for an entity instead of an industry which isn't really liable in that respect. In terms of costs, that's also, of course, very interesting always. There's also not so much difference, because incorporating an entity, of course, requires a notary and some assistance from Grant Thornton in general, whereas registering a permanent establishment does not require a notary, but requires a lot more paperwork in that respect. So in terms of the incorporation registration costs, pretty identical. As I said, both need to file corporate income tax returns, identical. Both need to file VAT returns, that's mostly also identical.
Yeah.
Where it is different is in terms of financial statements, because where an entity should set up and file its own financial statements, a permanent establishment only has the obligation to file the financial statements of the parent company, and there's a cost saving there. So what we typically see is that when companies do not know for how long they intend to be in the Netherlands, or they might even know, well, we will only be there for a short period of time, they decide to go for a permanent establishment, especially if the liabilities are not that big. Whereas if an entity has high probability of liabilities or intends to stay in the Netherlands for the long term, they decide or prefer for an entity.
Okay, and is it possible to start with a PE and later on proceed with an incorporation of an entity?
Yeah, good question. Yes, that's definitely possible, and that happens a lot as well, particularly because the Dutch tax law provides for a facility based on which there can be a tax-exempt conversion of a permanent establishment in an entity. So definitely worthwhile trying or starting off with a permanent establishment that was saving you some costs in the field of the financial statements. And then later on, when things are going well, which is hopefully the case, convert your permanent establishment into an entity tax exempt.
Yeah, so it's a way to easily start and still have local presence in the Netherlands.
Yeah.
And then also another subject comes up in my mind if we talk about incorporation and PE is when are you really established in the Netherlands? So there's quite some things to do in the business about substance, and also in my profession with VAT, I experienced some strange questions about companies whether they are in fact established in the Netherlands, yes or no, even if they have incorporated a BV, especially with the economic activities of the company. Can you, Charles, share some insight in that?
This is right, from a transfer pricing perspective, always the most important and interesting thing for us, understanding the overall value chain, understanding the streams, and to make sure that there's a good narrative, right? I think that is very, very important. Maybe we could change the next slide. Two slides.
Yeah. Oh yeah, one.
One more. Okay. So
no, back to the substance slide, maybe. Right.
Yeah. That's one.
Oh, we can talk about that. All right. Well, actually, so substance is actually quite important from a Dutch perspective, right? Ultimately, it very much has to do. Can you show that, for example, also in the Netherlands, that you have the right level of substance for what you're what the transaction is essentially. What we find is that in a usual transaction flow, you have a product that's being sold, let's say, by the parent company. A lot of times it'll be a US parent company. It'll be sold through to the Dutch entity, the BV, or to the branch. But let's say keep it BV for argument's sake. That BV then has usually agreements, contract relationships with third-party members or consultants, who then, let's say, on-sell those products, and then those members usually get remunerated based on commission basis, depending on the on the reward system, right? And that's one of the important intangible property, obviously, within each network marketing company, how that reward system is set up. And then a lot of times you'll have an entity that support that distribution entity that provides some sales support services in terms of supporting those consultants with their sales, maybe organizing some events, and providing other kind of administrative support services, or translation services, or website services and such, in order to be able to help help increase the sales within the market. If we go through to the value chain.
Yeah, maybe we could also talk briefly on the substance
Let's do that
requirements
first, yeah.
from a Dutch perspective, because we were at the point where we would have an entity versus branch. Let's say you go for an entity. What then typically is asked also, and I think you get a lot of questions from the Dutch tax authorities about that as well in terms of substance, is from clients, what are the substance requirements in the Netherlands? And that's always a pretty tricky question, because we have lots of different sets of substance requirements. We have different sets for treaty applications, different sets for if a company wants to obtain a ruling, different sets for financing companies. But in essence, we do not have substance requirements by law. So you can incorporate an entity without having a Dutch local director. What you need is a Dutch registered address. But then what clients often ask us, but what are in general the substance requirements in order for a company to be effectively managed in and from the Netherlands? And the most important substance requirements, as also listed on the slide, are of course that you have 50% Dutch resident directors who have the capabilities and who actually make decisions in and from the Netherlands. Very important in order to avoid getting into discussions with another country in which, for instance, if you have foreign directors. Other less important substance requirements are with respect to your bank account. Also a question which is often raised is, do I need a Dutch bank account? No, you don't. You need to have a bank account which should be managed in and from the Netherlands, but it's no necessity to have a Dutch bank account. I guess that's important to note. And maybe if I have some time left, also briefly touch base on the next slide on the taxation. So what are in general the rules? So let's say you come to the Netherlands, you want to start doing business here. What's our climate in terms of corporate income tax? Well, that's changing rapidly each time. So currently this year, 2022, it should list, we have a corporate income tax rate of 15% for the first 395,000 of profits, and 25.8% for all profits on top of that. Due to COVID, but also unfortunately the inflation, etc., we are running into that bracket of 395,000 will be reduced to 200,000 as per January 1st, 2023. And what's furthermore very attractive to note about the Netherlands is our participation exemption. So if you have a participation in the Netherlands, we exempt dividends and capital gains from those participations from Dutch corporate income tax. We have a very preferential regime for innovative activities. So innovative activities will be taxed at a corporate income tax rate of only 9%. Arm's length, I won't touch base on that. That's your field. And very interesting also is that we have a dividend withholding tax rate of 15%. But because of the fact that we have such a broad treaty network, that rate is often reduced to zero. Then taking into account that we don't have a withholding tax on interest and royalties apart from low tax jurisdiction, and then you get a quite favorable jurisdiction for having your entity set up.
The Netherlands, yeah. What I experienced indeed the last year, maybe the last 9 months, is that if a client of us is incorporating an entity, the Dutch tax authorities first will send a letter, especially if they see that the shareholders are outside the European Union, and they're wondering, are you really established in the Netherlands? And for for VAT, that's quite important to know, because all kind of incentives are depending on the qualification of to be registered or to be established in the Netherlands, like with import and with export.
I think from a transfer pricing perspective, that's quite important, is the overall functionality, right? And the ability to perform the most important risk management functions regarding the stream. I think one of the issues we see quite a lot is that, unfortunately, a lot of times there are no employees in the Netherlands, right? You might have a director, but that creates uncertainty also level the tax authorities, because from a we see a lot of times that there is a transfer pricing policy in place where the distributor is entitled some, a certain amount of guaranteed or based on parameters or operating margin, right? 2%, 3% on sometimes on limited risk basis. But the thing is, who's really managing those sales to the consultant? Who's taking the most important decisions? And sometimes there's a disconnect between exactly what you say, the economic activity, or actually the people on the ground doing the activity, versus the streams that are seeing, and the streams can be fairly large.
Definitely,
And that is a disconnect, and I think that is sometimes important to really address that issue, understanding, well, in what ways can we maybe increase, or our clients can increase their substance in the Netherlands, that there's more obvious that there's a bigger risk management, let's say, function here, specifically regarding the distribution of sales and the way the consultants are recruited and managed, and the sales are, let's say, trying to get more increase in sales. So I think that's really, really important.
And you should already think about that at least from the start, because most network marketing companies, they want to start their business in the European Union.
Sure.
And they are not really thinking about that kind of subject at that stage. They want to be incorporated, they want to start their business, but it would be very difficult if Dutch tax authorities or different tax authorities in the EU would say, you're not qualifying as an established person. And the way to do that, is by you're using your example.
And I think that's also why it's so important to have these multidisciplinary teams. Because if you would ask me, Monique, do I need to have people on the ground in order to be a tax resident in the Netherlands? No, you don't. But if I don't liaise with Charles, and if we are not there at the setup, then well, it will work from a corporate income tax perspective, but it won't work from a transfer pricing perspective.
And also not for VAT. No.
Exactly.
That's nice to see, and good that we cooperate in that kind of projects together, indeed.
And just to mention too, is a lot of times the Netherlands is used as a starting point, right, to expand within Europe. And the substance becomes even more important if you're considering to expand into other regions or within Europe and have maybe some sort of master distributor model, things like that, because otherwise you have all the entities kind of looking the same with not enough substance, which will at the end create quite complexity. So I think that's something else to consider.
And I think you also planned some examples, some slides about a special situation.
Yeah, well, we can maybe show some. We can skip these ones because actually we can discuss this real quick. I think the important thing to take into consideration here is what we show here: company B having purchasing the products from, let's say, the parent, and then selling it through to the third-party consultants, and then obviously they then resell. There's obviously different tiers. Getting services from another company. We see that a lot of times where they're receiving the support services, let's say on a cost-plus basis. A lot of times there might be an experience center, right? And how do you promote the products? And that sometimes can be in another country. It's also something to take care of. Are we dealing with PE in another country? If you sit with a lot of activities elsewhere to promote, so let's say, so it's always something to consider. If we go through some of the slides here, I think some of it we've discussed already. Let's go on to the next. So maybe just real quick discuss a typical value chain, because that is important, because when we talk about substance, we also talk about who's contributing, economic value, right, to the overall streams, who's performing which activities. So usually if you think about a value chain, you think R&D, right? And that's usually will be done by the parent company, right? Whether it's the marketing in terms of understanding more the tiers, reward systems, or actually the product development themselves, right?
Yeah,
and that's, some will be outsourced, some will be in-house, depending on the type of product being sold, and obviously making continuous improvements. So that's usually the role or the responsibility of the parent company. If we're going to the next, supply chain, selection of the products that are going to be sold, the relationships with the suppliers, because sometimes it will be manufactured in-house, a lot of times will be outsourced to production, and the quality control, packaging, that's usually done from a parent company perspective. If you go, the next one will be distribution with logistics. That's where we see a lot of times already the BV coming in, that there's logistics, there's warehousing. Question is who's really responsible for that. A lot of times it will still be the parent company, but logistics is obviously very important to make sure products are done, they're in time, and getting to the consultants in time. And that whole inventory management control is quite an important function in a distribution, also selecting what products to sell. Those are kind of ways that maybe can be used to increase the level of substance in the Netherlands.
And also other question like having a PE risk with having a warehouse in multiple countries can come up as well.
That's exactly right. So and it goes back to the CIT perspective, right? And you're looking at the treaties and how different countries are treating this. Then if you look at sales and marketing, that's obviously the main focus, right? So sales are done by independent consultants, right? That's and how those are being done, you might have events, you have experience centers, right? It's kind of a flagship to be able to promote, have customers and your members have a look and feel for the product, right? That's always very nice. And then obviously you have decisions regarding product portfolio, the payment of the commissions, which is usually would be done by the BV, as well as determining how much each of the consultants are entitled to, which the amount of commission, because it's quite a big calculation, of course. And then you have the after sales service. We have customer support, administrative, maybe order support, translation, things like that. So that's overall the value chain we're looking at. And within that value chain, we want to make sure that we do find enough space for the BV to actually perform enough important activities so that we don't run afoul of VAT issues, show that there's economic activity, and be able to show that whatever is earned in the Netherlands as well is appropriate. So I think we can go back to the next topics, and then we can.
So of course, I want to discuss some other items to consider in the field of VAT and customs. So we can go to the next slide, maybe 2 slides. Yeah. So I already touched base a little bit earlier about events. So many network marketing companies, of course, are organizing events. Maybe not the last 2 years, of course, during COVID, but it will come up again. And it's a common way to interact with your consultant or member base, educate them how to make a better salesperson of them. And also, of course, thank your consultants and members for doing their business. And like I already stated, events, there is special VAT legislation for that, which is not the same as the standard way of doing business, meaning that if you organize an event, it is taxable in the country where the event takes place. So it's really important that if someone comes up, hey, we are going to organize an incentive trip in Poland or any other European country, that you already are taking into account that it will have consequences locally. And in the past, it was not really a big problem, because usually as a network working company, you were already registered for VAT in those countries due to the fact that you exceeded the distance selling threshold in the past. So if you incurred any local VAT for hotels or for any the renting or audiovisual equipment, etc., it could be reclaimed in the domestic or local VAT return. But now often the case, those companies are not yet registered anymore. They're deregistered because it was possible to do that, because all the sales of the goods could be reported in the one-stop shop return. But still, they can experience some local VAT. It's good to know that that VAT can still be reclaimed. But yeah, due to the fact that you're not registered anymore for VAT, you need to submit an EU VAT reclaim request, which takes much more time in order to get your VAT back than before. Another option, of course, is again to activate the VAT number, re-register, so that you also are able to report the B2B sales of event tickets, which can officially again not be reported in the one-stop shop return. So that's some item to consider in respect of events. Another item is that the whole system contains still some technical flaws. So the best example is that a company provides a repair service. So it's a let's say UK business providing a repair service to a mobile phone to a private individual. And that private individual is a UK citizen, for example. He or she goes to Amsterdam, the phone breaks, and he or she wants to get the phone repaired. That repair service is taxable for VAT purposes in the country where the repair service takes place. So if the UK company hires a party and repairs the mobile phone while the person is in Amsterdam, then, and they ask a fee for it, of course, then that fee, that money, is taxable in the Netherlands where the repair service takes place. But the whole e-commerce legislation was not ready for that, because it states that you can only report that VAT in the one-stop shop return if you are performing that service to an EU citizen. So not a non-EU citizen, which is going on holiday or a weekend trip to Amsterdam. With the result that the company should officially be registered for VAT purposes separately in the Netherlands. Yeah, that's so strange that they didn't take care of that. So there's still some technical flaws in that field. One item which is very hard for me to explain to companies is there is a requirement for companies, if they want to make use of the one-stop shop return, that they are in the possession of an IBAN number. So it's an European SEPA bank account number. So it is not necessary to have it as a Dutch bank account number. It can be a European bank account number, but it should be at least an IBAN number. And yeah, the reason why that is required, it's very hard to explain, because with the one-stop shop registration, you can only pay VAT. You cannot reclaim any VAT. So the fact that they ask to provide an IBAN number is, yeah, for me, a very strange requirement. But it is clearly stated in the EU legislation. So I try to discuss it with the Dutch tax authorities, but they can say, yeah, we have to request that information, or else we are not able to register any companies for the one-stop shop return. But that's quite a difficult requirement, especially for companies which have a BV in the Netherlands, but don't have any EU bank account. Again, like Monique already stated, it is not required, at least for substance requirements, to have a Dutch bank account. So next slide, please. And then I wanted to discuss some small aspects about the future in the VAT landscape. Due to the time, I will discuss these two. So with the changes in the coming years, the European Commission, they want to introduce more opportunities to apply reduced VAT rates. And of course, network marketing companies, they often also sell products on which a reduced VAT rate could be applicable. It's usually the case with food and beverages, food supplements, that kind of products, water, on which a reduced rate can be applied. And it is good to know that in the coming years, the products on which a reduced rate can be applied is going to be increasing and updated and extended. So we, of course, will keep this in our mind, and if something will change, we of course inform our clients and prospects about these changes. One which is more important, especially due to COVID, and I think it's something which will remain, sorry, are virtual events. So, of course, all kind of incentive trips or events, they couldn't be organized the last couple of years. And many companies started organizing virtual events. And it was not really known how to deal for VAT at least with these type of virtual events. And it's good to know that it takes some time still, but it can be introduced by domestic of local countries a little sooner than 1st January 2025, that the virtual events will follow the VAT treatment of so-called electronic services. So those sales tickets or virtual events are taxable in the country where the customer is located, while normally it will follow the treatment where the event takes place. Yeah, it's a little difficult to assess if you organize a virtual event because it's at the country where the server is staying, it's at the country where the host is stated. So that resulted in quite some questions. So it's good that the European Commission made those changes in that field as well. Then yeah, the next slide, please. The next one. Yeah. So I wanted to touch base also about the commission payments and the incentive trips, especially the commission payments was not yet really discussed before, but Charles already made note of it, is that you really need to split out to which party you are making a commission payment. Because if you make a commission payment to a private individual or VAT registered company, it will have a big difference because the network marketing company is making a payment to, let's say, consultant or a member, which means that the member or the consultant performed a sort of service to the network marketing company for which they receive the commission. And for VAT purposes, that's a sort of fee for advertising, for example, to bring parties together and to increase the base of selling your products into the various members. And only if you are making commission payments to VAT registered members, you have to deal with VAT. And often, of course, the reverse charge mechanism is applicable. Well, if you make commission payments to private individuals, then in principle, there would not be any VAT consequences because the party who is providing the service for which they receive a remuneration is a non-taxable person for VAT purposes. So they don't have to deal anything with VAT. As many companies already also note, I want also to touch base on some withholding taxes. Especially in France and Italy, there is special legislation in place that if you make any commission payments to local members, local consultants, that you have to withhold a certain percentage of tax and remit that to the local tax authorities. And that's the VDI in France and the Incaricata alle vendite in Italy. So if you are opening your business in those two countries, it's important to know that you need to deal with it as well. One of the final subjects of today, but also very important, also with the connections, of course, with transfer pricing, is customs. So a lot of things changed also due to Brexit and with the e-commerce changes in the field of customs. To get your products into the European Union is gotten more difficult than before. And also getting your products out of the European Union to a non-EU country is also getting more difficult at the latest in the last couple of months or years. And that is caused also by the exporter of record change. So a non-EU based entity can no longer act as exporter of record. So the company cannot export any goods outside the European Union. And that's one of the reasons why it's important to have a domestic entity or permanent establishment that you qualify as a domestic established person or taxable person at least, that you are able to export your goods again outside the European Union. Also importing is getting more and more difficult because if an entity which is not incorporated in the EU, wants to import any products in the European Union, they need to appoint an indirect customs representative. If you are established in the EU, you don't need to appoint an indirect customs representative, and it's much easier to find such a person than indirect customs representative. So another reason why it's good to oh.
Oh, ik ga het nog even dus. Excuses. Yeah.
That happens with a live webinar, of course. My apologies. So let's proceed from this. So another subject, of course, is also the customs value. And the customs value is not also only important for VAT, but also for transfer pricing, because you need to pay customs duties on the customs value of the goods. Yeah, Charles, can you add something about explaining what the importance is for transfer pricing in respect of this?
Well, what you find is that a lot of times the customs authorities are actually asking for transfer pricing documentation. And in part it's because they're trying to figure out, well, okay, how does the supply chain work, right? How does the transaction flow work? Because they're seeing a very low, a lot of times, COGS, right? Cost of goods sold, customs value. They say, well, it's very low. And by the time it gets sold ultimately to the end user, the price might be, 4 or 5 multiples of that initial value. And so the customs authorities are asking about this and saying, well, actually, for them, they would like to use a value much more close to the end sale. And that's where the transfer pricing documentation comes in. Is very important, and to actually explain that transaction flow, to show the value that the Dutch entity is bringing to it, and the reason for the increase in value of that product that was imported into the Netherlands, ultimately as it gets to the end user. So that is the principle, and just explaining how that works, and the commission payments, and the marketing, development activities, and the design, flagship stores, things like that. Without any robust documentation, the customs authority will be much more inclined to take the view that suits them best, which is obviously not to the detriment of our clients.
No, definitely that's the case. Now, also, of course, we are happy that we have a collaboration with Customs Knowledge, a third-party customs advisory firm, which can also assist with all kind of difficulties which could arise with importing or exporting your goods. And many of our clients, of course, unfortunately, they had to deal with customs, that customs value was too high or too low. And together with them, we can definitely help the network marketing companies to solve those issues they may have. So we are reaching the end of this webinar today. We have some minutes left for some questions. Let's see whether some questions came in. Yeah, someone is asking that there's quite some news about new EU legislation in the field also of direct taxation. Can you share something about that? Maybe that's a good question for you.
Yeah, of course. Yeah, there's a lot of going on, and I think we could have talked for additional 1 hour, Charles. But what you see is that the EU has published quite some new directives recently. So we had the Anti-Tax Avoidance Directive #1, who introduced the earnings stripping rule, which makes sure that you cannot be too over leveraged in terms of debt, and restricting the interest deduction at a certain level. Then we had ATAD 2, which targets hybrids, and that is something we saw with some multi-level marketing companies, especially if they're US based, because they basically can deny a deduction if it's not included and pay to or from a hybrid entity. Well, from a Dutch perspective, a US LLC, for instance, is regarded as a hybrid entity. And if the US checks a BV, it's also regarded as a hybrid entity. So really be careful with ATAD 2, so this hybrid directive, when setting up your structure, because especially when you're paying management fees, royalties, interest, we saw them all, right, Charles? You can get hit. And then there are two recent developments, which is the Anti-Tax Avoidance Directive number 3. Yeah, so we keep on running. Yeah, and that basically hits entities which have outsourced their management in Europe and which do not basically have sufficient substance. I don't expect MLMs to be hit because it will only target entities if for a significant part they have passive income. So unless it's really only royalties flowing through the European entities, I don't expect them to be hit.
That's so common, not the case indeed.
Yeah.
With selling all kind of goods, they're really operating companies.
Yeah, so I don't think they will be hit. ATAD 2 is an interesting thing. Again, if you're from the US and you're going to Europe to incorporate, please be cautious to check whether you won't be hit by that directive.
Another one is tax 6.
Yeah.
Right, you're seeing also when restructurings take place, and if you look at some of the transfer pricing, let's say hallmarks, one of it is if there's a restructuring, so change of functions or assets that have an impact of lowering an EBIT by more than 50%, then that needs to be reported. So that comes in the line of exit taxation. We see it also with Brexit. We have customer lists moved, or client relationships related to the consulting moved from the UK, Netherlands, vice versa, that you're seeing certain restructuring. Yeah. And so if it's a pretty significant one, there's a DAX 6 notification or reporting that's to be done, but it also needs to be then supported properly in terms of a defense file, proper documentation to show what's happened pre and post in order to defend that, and you will likely need an evaluation as well on that, on the transfer of a customer, assuming it's something of value. So yeah, a lot of changes
are happening.
Yes.
Yeah. Yes. And indeed, one of the last questions which we can discuss now is also about, in respect of VAT, is whether there are any changes due to the Brexit which we can share. And that's indeed a good thing, because not only in the field of direct taxation or transfer pricing, a lot is happening, but still also with the Brexit, we still have to deal with the outcome of that, and they still invent all kind of new legislation in that field as well. And one of them is, and it will have a significant impact also for the network marketing industry if they sell any food or beverage related items or electronics, is that if you are going to sell to the UK market, there will be a new label requirement, meaning that on the label it is obliged to state a UK established entity, address and contact details on the label of the products. So if you have established a Dutch entity, but also sell to UK customers, you have to deal with that requirement, and it's really hard to press. We understood it maybe 1 or 2 weeks ago that it will happen. We will inform, of course, our clients about that the change when we got the complete picture. That's definitely a change which will come up, yeah, unfortunately sooner than later. So I think that we are then at the end of our webinar. I want to thank you for attending and for your input during this webinar. Again, like stated before, we will answer any questions in the Q&A which you will receive afterwards. You will receive that indeed afterwards together with a copy of the slides. It was also one of the questions, of course, raised. So you can watch the webinar again at your own leisure or share it with any of your colleagues. If you have any questions following up this webinar, of course, feel free to contact us. Finally, you will see shortly a short survey on screen, and we would really appreciate if you could take your time to complete this survey, so that we can also see where we can improve things further. should really cost you little time to do so, and would be very happy if we could receive your input. Yeah, thank you in advance for your cooperation, and I hope to see you soon. Have a great day. Bye-bye.
Thank you. Bye-bye.
Bye.